In this video, we're going to talk about something that's not flashy, but it's honestly something that separates the traders who last from the traders who burn out. And to me, that's risk management, especially in swing trading. Because the truth is, most people are trading way too often, risking way too much and confusing their activity for progress. But if you really want to see consistent growth and you actually want to preserve your mental capital, swing trading done properly is the most sustainable way to do it. I want to start with a couple hard truths here. Over 90% of active traders are losing money. Only about 10% make consistent profits. And the most wild part is studies show that the more active you are in trading, the less money you make on average. That means people who are trading every day, chasing every move, scalping every candle are usually digging their own hole faster. Why? Because constant trading drains you mentally, emotionally. You start trading what you want to see, not what's actually there, and you're taking setups out of boredom and revenge, not conviction. And the solution to this is swing trading, because that flips that entire model. Instead of being glued to your chart all day, you're waiting. You're analyzing the macro picture, fundamentals, sentiment, structure, and you're aligning your trades with a broader narrative along with your market structure. With this, you're not reacting to noise. You're positioning yourself for a move that's already being built by the macro environment. And the beauty of this is you only need a couple high quality setups a month. If you can catch 2 clean trades aligned with your bias, that's enough to move the needle. And my biggest edge with swing trading is that I'm not trading for dopamine. I'm trading for profitability. I'm preserving my energy, my capital, and my mental focus for the trades that actually matter. Big thing I wanted to talk about is risk management, because this is almost where everybody fails. Here's what most traders do. On average, they're over leveraged, they overtrade, and they don't even know what they're risking until they've already blown half of their account. Pros do it the opposite. They're risking in terms of units, not dollars. When you risk small, consistent percentage per trade, you can survive losing streaks. You keep yourself in the game long enough for the probabilities to work in your favor. For example, with my risk being only 0.7% and dynamically scaling my winners and my losers, if I have a down month, I'm probably down less than an entire percent, which means if I hit a standard 1 to 3 RR trade, which is on average the low end, I can lose 3 trades before winning 1 to make that all back or even more. Think about it like this. If you're risking less than 1% a trade and targeting smart asymmetric setups, even just a few wins a month can produce steady, sustainable growth. Meanwhile, the traders that are risking 5-10% trying to flip an account, they're statistically done in a couple of months. A study from the Robust Trader found that the more frequently you trade, the worse your average performance becomes. Even research from Stanford shows that traders with less time to trade actually perform better because they take fewer, higher quality positions. In other words, quality over quantity. It's not a saying, it's proven by data. Now, before I hop into the chart, I want to talk about the mental side about risk management. Because risk management isn't just about protecting money, it's about protecting your mindset. If you're trading every day, your emotional capital gets drained fast. You start second guessing yourself, chasing losses, or even taking random setups just to make something happen. Swing trading gives you a lot more space. You're letting the market breathe. You're letting yourself breathe, and you're approaching every setup with patience and clarity. You're not living candle to candle. You're thinking in terms of narratives and structure. And when you combine that with disciplined risk, the results compound quietly over time. So that being said, I've been very tame on gold this month. I've actually only executed 2 positions, and the second position is very, very recent and a reversal of my first position. So my macro bias on gold was short this month. I was very happy looking for shorts. As you can see, we were in a huge fall off and failing to break the higher highs and continuously making higher lows from the left. That being said, with this swing low marked out, we get another swing low up here, and this just became an area of rejection for me. We failed to continue higher, and with so much selling pressure from this area, I ended up executing a trade on November 3rd, taking shorts down towards this swing low. Now, unfortunately, gold does what it did best, reacted off this area right here, and just reversed completely. This is when I set a pretty big stop loss that is not tied to RR, but more so tied to the macro bias. Now, with everything going on in the world right now, especially with Trump's tariffs being called into question about the legality, currently still in a government shutdown, I think that we are due for more of a push forward or a short-term pullback. So that being said, after breaking even on my first trade that I did showcase on my socials, I ended up looking for confluences that we should be entering trades to the upside. And this is exactly what I did here. So kind of a quick turnaround for the entry for me with the conviction I have surrounded by the macro backdrop and continuously seeing bullish market structure forming now. This was a pretty slam dunk trade for me to take. We are currently in profit on this trade. We pushed very, very high on the same day. And I was hoping for a quicker execution on this, but we came back down. Gold likes to do that, and that's just part of it. I'm not watching this trade at all. I've set alerts and I'm just letting it be. We're currently over the weekend right now when I'm recording this, and I won't be really looking at this until later next week. If it hits SL, you know what? The trade idea was wrong. If the trade hits TP, my bias played out and we were correct. All this is pointing to is me staying consistent to my strategy, taking only quality setups, saving my mental capital, and focusing on strict risk management. Now, seeing this massive wick to the upside made me want to shorten my stop loss, which I could have done, but with gold, I do foresee us testing these areas again before continuing higher. So for me, I'm happy to keep that risk on the table. Nothing is worse than getting stopped out and then your trade going immediately to TP. And through swing trading, I have noticed a lot of that, and that is one thing I like to avoid now. When I'm waiting literal weeks for a setup to form, I'm not second guessing myself or chasing my losses or taking a random setup just to make something happen. I'm positioning myself accordingly with the proper market structure bias and my macro bias, both in sync to execute the trade idea. Going back to the trade I was showcasing before on the NASDAQ, this took a total of 13 days to pan out completely from start to finish. And with 13 days of run up to take a 2-day trade, I'm very happy with that because that means my market structure was on point, my macro sentiment was on point, we had a quick execution with very minimal drawdown, barely even 20 minutes of drawdown, might I add. And once that execution was finished, I had locked in my profits for the month of October. I hadn't had any other setups this month on the NASDAQ. Right in the last few days of the trading month, I was able to snag this trade. I was patient, I was positioned accordingly, and I had the correct bias. I'm not living candle to candle. I am thinking in terms of narrative and structure. And when I'm combining that with very, very tight risk, my results have never been better. What you should take away from this video is if you want to build consistency, stop trying to trade everything. Trade less, but trade better. Focus on risk management, macro context, and patience because that's what the data supports. You don't need 100 trades a month to grow your account. You just need a few good ones that actually align with your edge. And when you build that discipline, you're not gambling anymore. You're trading with intention. If you found value in this, make sure to leave a like, subscribe, and drop a comment about what you're currently focusing on in your trading and your shortcomings. I love seeing all the comments you guys are leaving on other videos and other socials, so be sure to keep that up, and we'll see you in the next one.